Hi everyone. Thanks for joining us today. I will be sharing some slides quickly, some intro slides before we get to our main speaker. So thank you again for joining us on what is a very sunny day outside. So hopefully our guest speaker today will make it worth your while for anyone tuning in. We have with us today Xiaodin Wang, who is the CEO of Elite UK Commercial REIT. So she has over 25 years experience across the sector. She's probably going to be someone who you can ask questions to and field questions to on anything that you have, questions about in terms of the REIT itself. She has an extensive experience across different parts of the property industry, and she headed up the investment team at what we now know as ESR Logos REIT, which is a industrial REIT here in Singapore. And she spent time in the UK. She did a master's at the University of Newcastle. So I'm sure she has some insights and unique insights into how the UK property market works, and specifically, how that relates to Elite UK Commercial REIT's own portfolio. So before I hand off to her, I'm just going to quickly cover a little bit about ProsperUS, who we're co-hosting this with Elite Commercial REIT. ProsperUS is a digital brokerage looking at connecting with the younger generation, people who are digital natives. We have, multi-asset, multi-exchange offerings. We have an educational portal as well, where myself and my colleague Billy will write on educational topics for long-term investing, good habits, best practices. We have a very, very dedicated service team. So please do follow us on our socials. Also download the app, open an account if you haven't already. You can come prosper with us rather, social media sites. Follow us on Telegram or Instagram, as well as visiting our website and just check out our content that we have there and perhaps sign up. On a separate note, I've also got my own newsletter, which I've started up. Follow me at Tim Talks Money on Instagram and sign up for my newsletter at timtalksmoney.com, where I really just wrap up what's happened for the week in Asia. So my weekly newsletter is Asia Tea Time, giving you sort of the insights into what's happening in Asia and for Asian-based investors. And then also Tim Talks Money and my associated accounts is a bit more about best practices when you're investing, thinking about long-term investing and what you should be focused on in this current market environment. So without any further ado, I will pass it off to Xiaodin Wang and she can take it away.
Right, thanks team, and good afternoon everyone. Thanks for spending some time with us this afternoon. We'll quickly run through the presentation for the FY 2022 results, and then I think we'll leave more time for Q&A later. I'll have Joel Chia, which is our CFO, with me today, and he will join in at the Q&A session to answer any of those questions, particularly pertaining to the finance section part of it as well. So maybe with that, let's start the presentation then. Can I have page 4? Thank you. Right. This is the key statistics for Elite Commercial REIT. We are still remaining as the first and only UK-focused as REITs listed on Singapore Stock Exchange. We were listed prior to the onset of the COVID pandemic. Today, we have got 155 office assets all across the United Kingdom, which is shown on this map of UK here. So you can see all the little dots, that's where all the offices are. So the offices are actually a network of government offices that is to serve the particular department, mainly the department called the Department of Work and Pensions. So they need to be very accessible to the people that needs to access to this. So I'll talk a little bit more about that later. But I think on the summary part of the key statistics, of the 155 assets, majority of them, more than 97%, is actually on freehold land. So we have got a couple of assets that are on leasehold and long leasehold. The tenant itself is actually the UK government. So we let more than 99% of our assets to the AA credit rated UK government. So they have been a very highly credit rated tenant, and they've proven themselves during the COVID period. We have always been able to collect a rental in full and on time, 3 months in advance throughout the period. So the leases are all on triple net leases. So in the UK, they call them the full repairing and insuring leases. So basically, the government has to maintain the building and do up the any of the works that needs to. They are in charge of the security and insuring of the assets as well. Now, coming quite close to what we are coming to in April, there will be a rental escalations on majority of the assets that we have, because most of the leases that we have comes with a built-in inflation-linked rental uplift, which is due to happen in April 2023. And the valuation of the portfolio at the end of the year stood at £466.2 million. Next, please. Right. For the FY 2022, it has been a very challenging year on the macroeconomic fronts. Particularly, it has been a very volatile year, especially towards the second half of the year. However, we would say that the Commercial REIT has been able to report a very stable set of financial performance. In terms of revenue, there is an increase by 6.7% year-on-year comparison, mainly due to the full year income collected from the maiden acquisition that was done in 2021. And our DPU was reported at 4.81 pence, and our gearing ratio stood at 45.8%. We have also have a very resilient portfolio with income certainty. We managed to get our lease re-gear in the beginning of the year, so that we have got certainty on rentals coming in for the next 5 years for majority of the assets. We have always been reporting consistent rental collection, like I've said earlier, 100% of that. We never need to trigger any of the government support systems during the COVID period. We have also got some renewals. One of them, which is done closer to the second quarter of last year, was St. Catherine's House, where we see a 12% rental uplift in that property. And I guess I've already spoke about the valuation, which we'll talk a little bit more later. Yeah? Next page, please. Right, on the financial front of it, the distributable income that is reported for financial year 2022 stood at £23.1 million, is a drop of 5.8%. This is mainly due to the borrowing cost increase, particularly towards the second half of the year. So we do see that the Bank of England has raised rates from close to 0% at the beginning of the year to at the current rate, which is 4%. So that's where it has impacted on the borrowing cost. And of course, that also then translates into a lower distributable distribution per unit. And we are having a 4.81 pence distribution for the full year. So apart from the increased borrowing costs that we see in 2022, I guess the other three factors that have affected the distribution comes from the election of managers' fees in cash. So that decision was made at the beginning of the year, instead of collecting in units, which unnecessarily like dilute the pot for the investors. We decided to collect them in cash. That is also to fund the operating costs of the manager as well. So that's the two key items. The other two, it's basically more not that substantial in terms of the changes in DPU, which is, of course, we have a slightly lower marginal occupancy rate at close to 98%, so a 2% decrease towards the end of the year. And there is also an enlarged equity base due to the implementation of the DRP program that started last year. Yeah. Next. Well, this is a table of, I think, what I've mentioned earlier. Maybe on the revenue front, we do see an increase. Unfortunately, it has been offset by the increased cost that was mentioned earlier. Next. On the balance sheet side, I think what we have, excuse me. So what we have here is that the total assets reported was 486.8 million, and we have an NAV of 52 pence at the end of last year. This is the chart for our debt maturity profile. I would like to say that we have managed to refi the loans that were due in 2023 that, during a very difficult time. But that means that in 2023, we are left with very minimal debt exposure. So majority of the debt will be expiring in 2024 and 2025. The total debt stood at 222.2 million pounds, gearing at 45.8%. And the borrowing costs, as reported at the end of the year, with the increase in interest rates, stood at 4.6%. But we have a very healthy interest coverage ratio at 4.76 times. And we have also fixed close to 70% of our interest rates as well. Next. So last year, I think there is a couple of key highlights apart from the asset management side, which we'll talk about later. On the capital management side, I think there are a few milestones that has been achieved. The interest rates rising is also leading to investors and financiers taking a very cautious position. So we have been very proactive on capital management. We have actually refined the loan way in advance for the expiry. We have also established a $300 million multi-currency debt issuance program at the end of the last year, but that is actually to be in place when the time is right and when the market is available for us to proceed with any potential fundraise in future. We have also, extended the loan of 94 million for another 2 more years. It actually has got an additional 1 year at the borrower's extension further to that 2 years, subject to certain conditions and covenants within the loan agreement. In November, we actually secured an inaugural green loan facility of 15 million pounds. It's a green RCF, and that is actually to fund the wider sustainability strategy, which we have announced to the to investors much earlier. Yeah, so there was also some pay down on the bridge loan as well. So that's on the capital management front. Coming to the asset portfolio side, we have about 98% of portfolio being let out. So we have close about a 2% occupancy rate currently on our portfolio. And the WALE for the portfolio currently stood at 4.8 years. Next. Right, so this is the chart of the WALE chart. We have managed to extend most of our leases all the way to 2028, removing the break clauses in the agreement itself, which means that the tenant no longer have any ability to get out from the leases. So that gives us income certainty from the government for the main part of the portfolio. Now, there's a tower in 2023 that shows that is the number of assets which we have announced a year ago on where the government decides that they will be moving out of these assets. So currently, asset management work with regards to dilapidations negotiations are all ongoing. So once the property reverts back to us, we will be able to work on these assets. So we'll talk a little bit more on these later, but throughout the years, I think there is no major expiry that's going to happen in the next couple of years, all the way till 2028. So discussion with the government on 2028 already started. So we're not sitting on our butt doing nothing. So that's where we see, through the process, we would like to sort of manage that tower a bit more better. I think it's in mutual benefits and agreement between the government and us as well. Next. In terms of the geographical location, apart from the chart that the map that I shown earlier, in terms of percentages of where the assets are located, you can see that most of the assets are located in the London, South East, Northwest, and also Scotland area. We have got the rest of the country covering slightly more than 1/4 of the portfolio here. Next. In terms of our tenant base, I know people has always been complaining that there's only one tenant, which is the UK government. But actually, to be very frank, it is the UK government, but it is actually used by the various departments of the UK government. Majority of it is a department called Department of Work and Pensions. They are our key tenant. we are also their largest landlord as well. So it's a department that we have worked with since listing, but through the maiden acquisition in 2021, we have started to diversify into other tenant base as well. So now today we also have the Ministry of Defence, we have the National Records of Scotland, the courts and tribunal houses, etc., on our lease as our occupiers. And the intention in future is that we also would like to expand this, base to more of other government tenants as well. Yeah. Next. Right. I've mentioned on our valuation earlier on, there is a 6.8% decrease in our portfolio valuation on a year-on-year comparison. Now, the main reasons for this is not because of anything else, but the steep rise in interest rates when a Bank of England decides to hike its rates. So the valuation, the value of the portfolio is valued on an income cap method. So basically, what it means is that when there is actually a higher borrowing cost, it causes the cap rates of the assets to come down. So the key reasons being steep rise in interest rates, or weaker demand in terms of real estate investment, which also pushed the cap rates up, and also the high inflation, which has pushed construction cost up. So that increases the the cost of the materials and stuff like that, and that has an impact on our valuation as well. So these are the three reasons, or main reasons that we see. Now, UK commercial property has fallen much higher than what we have seen. So basically in January, when we looked at the CBRE report, in general, the UK commercial property has fallen by 13.5% based on their recent study, and the capital value growth was, a negative 12.1%. So I think that's where it is in terms of valuation. And because of the drop in the valuation, it has impacted the gearing ratio as well. Next. Inflation. To us, inflation, it's also a benefit because most of our leases comes in with a rental escalation that is pegged to the inflation rate in the UK. So how it works is that this is actually compounded over 5 years, starting from 2018 when the leases were signed. So every year they will compound the announced inflation rate, but there is actually a floor and cap of a 1% to 5% minimum, meaning that when the inflation goes below 1%, we have a minimum 1% increase. And when the inflation goes beyond 5%, you have a maximum of 5% increase, and that's compounded. So what we see is that, with the new with April coming in, the new rental rates based on the formula and the CPI that has been announced, this should be close to a region of 15% of rental escalation that we will be seeing in the April months onwards. But on the long run, I think that will the CPI is expected to come down and fallen towards more closer to 4% at the end of the year. Now, I think I've mentioned a little bit more into this rental uplift. Now, this is the breakdown of the assets that are, the way it's being uplifted. So the golden circle is actually the CPI linked, and the rest are our portfolio. Some of them are actually on a RPI linked or MRV. So I guess that's constitute to a small percentage, which is about 5.8%. So I think there is also some differences in terms of the assets that we have mentioned earlier. 11 of them, it's actually going to be vacated assets, which they have announced in March last year, which we have announced in March last year due to agreement. But there is also 12 assets which will have some adjustments in our rental income. But with that adjustments, they are also due for the rental escalation as well. So that's the breakdown. I think this gives a short synopsis of what's going to happen in a month's time on our revenue. So on the next page, it talks about asset management. I mentioned earlier on St. Catherine's House, which we have actually renewed at the end of last year in December. That lease will start at the end of 2023, which means that we have got a 6 years rental coming in from this particular question from this particular property. Apart from that, I think the manager is very keen to focus on tenant retention. So we have always been working very closely with our tenant, forming collaborations with them, and particularly what we call the sustainability collaborations with our tenants. That is the aim of this, is actually to keep them occupied in the property for a much longer period of time, and also to understand what are the things that the tenant is actually doing on our building. Like I said, these are on FRI leases, so which means that if they need to change the window panels, they come to us for approval, but they are paying for the window panels. They need to change the boiler systems, they will be funding for it. But I guess what we want to do is we want to encourage them to continue spending on the building, so that the building value increases through the upgrading works of this property. So this collaboration started a year ago when we negotiated with DWP on the leases, and we decided that we would like to pump in some of the money into this upgrading, so that it sort of form parts of the funds for the upgrading works. But more importantly, is actually forming a collaboration. So now we have got a formalized working group that meets on a regular basis. We will know exactly which are the assets the government is actually putting money into, which means that translates into more potential of them keeping in that building for a much longer period of time. And it also helps us in terms of negotiating and understanding future leases with the government. And more importantly, we are able to increase the energy efficiency of the building, which is what everyone is looking at, and hoping that will increases the attractiveness of that building to more tenants as well. Particularly when the past winter, we see the high utility costs that has actually hit the whole of Europe, and that's very important. Yeah. So with regards to the assets that we've mentioned earlier on, those that are vacated or going to be vacating at the end of the month, there are a few things that we are doing on these properties. Sorry about it. We didn't realize that we were cut off. Can you hear me now? Okay, great. I'll just continue from here then. So I think I've been talking about the negotiation of the lab settlement. So in the UK, what you do with the government is that when they leave the building, they will come to an agreement with you on the delapse cost. So that is what we are settling. Why it's actually important is because the delapse cost is quite substantial. in our case, because the government has been in the buildings for a very long period of time. So in terms of the amount, it varies from property to property. It could actually, accounts for like 40 or 50% of the valuation of that property in certain situation. So I think that's where we are coming from, is first negotiate on a very reasonable delap settlement. Any of this settlement that comes in, if it's not used to fund back into the upgrading or refurbishments of the property, can also be used to pay down our debt in that case. So that's one of the options which we are working on. The other is actually to relet. So all the properties has got its agents representing. So they are actually going into the market for reletting as an office or other users. Now in the UK, it allows something called a alternate change of use to other users as well on the property. So the study goes beyond just getting an office tenant coming in. It goes into whether it has got better value if we actually change it into other users. So we are not saying that we will actually definitely go into any redevelopment or development of the process, but to get a permit to change of use of that property will enhance the value of the assets. So there is in the potential of a disposal, we can actually dispose of the assets as an alternative use as well, which then creates a better value for the property. So that's in this way, what we're doing is we want to maximize the value outcome of the assets while minimizing any holding costs that we have on these assets. Next, please. Okay, we have been talking about greening the portfolio, something I've mentioned a little bit more on just now on the collaboration. So I guess what I'm talking about here with regards to the sustainability collaboration and the enhancing work that the tenant is doing are listed here. So things like, changing the refrigerant system, changing of the boiler system, the air conditioning system, or the air handling system, etc., or even the roof replacement projects. These are actually projects that will increase the energy efficiency of the building. In the UK, every property has what it calls an EPC rating. The higher the rating, the more efficient it goes. So what we are aiming to do is that we want to actually bring our EPC rating closer to the higher grading as much as possible. So this is one of the activities that we are doing. Other things like installing of the those charging vehicle electric charging ports and all that, those are actually done at the cost of the tenants. So they are also doing such works at our buildings, but they will need to seek our consent. Hence, we will know which building are actually being upgraded or being installed with such facilities. And we also try to include as much of the green lease clauses into our agreement. Majority of our leases actually does have green lease wordings contained within. Now, those that have not got these wordings in are now progressively added on as and when there comes for a lease renewal. So that will help us understand the the property in terms of our environmental requirements much better. Next. On the UK outlook, the UK economy is still slow, impacted with high energy prices and interest rates. Inflation numbers have been staggering, but it has dropped slightly in December. But in the last round, which is just reported, I think it comes back up a bit again. So the Bank of England is expecting that towards the end of the year, they will hope that this inflation rate could come down to close to 4%. But Bank of England has continued to hike its rates to curb inflation. It has now reached 4%. I think the new announcement should be coming out probably around today, and to see whether it will follow the Fed's rise interest rates as what the Fed has done yesterday. So we hope that with the current situation, this is also what we are seeing. It's coming to slow down, and hopefully, it will stabilize us towards the second half of the year. Unemployment rate is about 3.7%, but Bank of England is projecting that this will rise to around 5.25% in the medium term. Next. On the real estate market outlook-wise, the outlook is still quite weak. The office yields increasing, resulting in the compression in pricing. The table here is analytics done by Knight Frank recently. So the market views is that the pricing will stabilize this year after a decrease in investment volumes in 2022. But the rising construction costs and development volume has slowed, so the supply will be also limited. The market is still optimistic about the general regional office market outlook, and the focus or demand is actually more towards the refurbed that has got a better efficiency. For those properties that has been refurbed and provides a better energy efficiency as well. Next. This is a summary of the REIT. We believe that we are like a hedge to the rising inflation. We have got lease stability and income visibility. We have got a long portfolio WALE of close to 5 years for commercial building. The lease are all on full repairing and insuring basis. So the increase in costs, it's not actually impacting us. What is impacting us is more for the interest costs rather than the operating costs. We've got inbuilt inflation-linked rental escalation that will come into effect in the next quarter. It's also naturally hedged against Forex because we are both asset and liabilities all denominated in GBP. Close to 70% of our interest rates are fixed, and we have been able to distribute our DPU according to what we have committed during the IPO, and has also continued to be consistent currently because of the 100% rental collection that we are able to achieve throughout the period. Next. Right. I guess this comes to the general strategy. Looking ahead, the manager will continue to focus on delivering sustainable returns to our unit holders. We endeavor to realize any opportunity for growth via value enhancing acquisitions as we are small. But on this front, I would like to stress that the manager is cognizant of the current situation. So we will evaluate every opportunity with care. The opportunities that we have is actually through one, the ROFO pipelines from the sponsors, and two, from the open market. But the manager is not going to hastily enter into any transactions for the sake of growing. But we will have to look at it on an overall basis to make sure that it makes sense for the REIT. Now, what we are focusing more on is proactive asset management. We looked at trying to upkeep our building through the green collaborations with the tenant, trying to ensure that those buildings have improved in energy efficiency. We actually would also like to see that we are able to extend some of these leases to a much longer period of time once the investments has been done on these buildings, to make sure that they are in demand for the tenant and in requirement for the tenant as well. So I guess the asset management work and sustainability integration is something that the manager is focusing very much on in today's market. So I guess with this, I probably come to the end of the presentation. But what just one point to notice that the price has been affected by the current market movements. So it has been very attractive considering what I have shown earlier on. And we're happy to take more questions from any investors.
Thank you for that, Shaldine, and I know Joel's on the line as well. Before we get to Q&A, I just wanted to share for people who may have joined late to follow me on Tim Talks Money on Instagram, and sign up for the newsletter at timtalksmoney.com, where I give you some pretty good Asian insights and a wrap up of what's happened in Asia and the impact on you as an investor in Asia. Okay, so I think we can get to the Q&A now. We have some questions coming in already, so maybe I'll take the first question that's come in from the audience. Maybe I'll pose this to you, Shaldine, and maybe Joel, I don't know if you want to come in as well with your own thoughts. But you made the decision to list on the SGX, so the Singapore Exchange. why did you not trade the units, or why did you not list the units rather in Singapore dollars instead of Great British pounds, instead of the British pound?
Yeah, I think I can take this. At a point in time on IPO, there was a decision to be made in terms of whether to list it in the functional currency or in Sing dollars. And we had to, we got our feedback from investors at a point in time. And there was an overwhelming majority of them that say that they prefer it to be listed in GBP. And that is the reason why we are on GBP. And it's quite common for foreign listed REITs to actually trade in the current functional currency of the assets where they are based in. So you look at the US REITs that are listed in the USD, you look at Cromwell that's listed in euros as well. So I think that's not, I mean, fundamentally it's logical to do so because from this, to reduce currency mismatch. Yeah.
Okay, thanks for that insight, Joel. Anyone else who has questions, please just feel free to type in your Q&A or any questions that you may have in the Q&A box at the bottom. We'll move on to some questions that our team has, ourselves, like from ProsperUS. So you mentioned in the 2022 full year press release that there are 12 assets which are vacant, right, or being vacated. I'm just wondering, apart from the actively marketing this to potential occupiers, what are the other options available for these assets?
Right, I'll take this one. Yes, but majority of them are actually not vacant yet. So we will be taking them, at the end of the month. But actually within the assets, a couple of, I think if I'm not wrong, 1 or 2 of them has also been extended towards September. So which means that the tenant will continue to stay and pay for another half a year more before they are moving out of it. So before they are moved out of the building, I think what we can do is we can do marketing, we can do preparation works. The key important is the labs, which I mentioned earlier. A number of the assets, we are coming to the finalization of the delapse amount. Some are still under negotiation. So just a bit of insights into what that is. Basically, you will have to get a surveyor in to analyze which are the parts that, we would need to claim back from the government, and there will be then a negotiation with the government to say that whether the pricing quotes are reasonable, the things that are being claimed are reasonable, and to come to a commercial decision on what's the final amount. Like I've said, majority of the claims that we have gone to the government has got very substantial amount. So that's why we are very keen to make sure that that comes in first. And once the delapse is it's settled, the next steps is, of course, then, if the property comes back to us, we need to re-let it out. So marketing efforts have started in the UK. Each of these assets are located in different locations. So we have got agents at different locations, both the regional and the countrywide agents looking at that property to lease it out as office space. Now, having said that, sometimes the returns on that property is not as best value as office use. It could be very close to a university. Then there is a high demand on student accommodation, or it's actually in a place whereby there is a huge demand on residential and there's a lack of that. So the good thing about the assets in the UK is that there is a potential to apply for permitted change of use permitted, so which means that you get a permitted development rights to change the use of the assets. So for example, a property, one of those properties, we see a huge potential of it being used as a student accommodation, and that's able to increase the number of beds, which means that the value of the asset would change if that is being permitted. So paperwork needs to be started, and we need to get the planner in, we need to get the architect in to do some work and make the submission to the government to start that. But you can't start this process before you actually finish off your delapse cost, because any submission is going to be publicly in the UK. So once you do that, the government can come back and say that you are going to tear this building down, or you're going to change it. I'm not going to pay you the lapse cost. So that's a very commercial and obvious question. So there is a timing issue on that. So we need to manage that carefully. And with that, I think most of the buildings might still remains, but there are a couple within the portfolio that has got certain potentials, which we are looking at. And with that permitted development, you are able to then to dispose it off to of developer at a different value hopefully with a
Right.
much higher value. That's why you're doing that. So these are the works that we are working on each of the individual property.
Okay, that's interesting. Good to know. Okay, got another question from the audience. So Elite Commercial REIT's gearing ratio is very close to 50%, the 50% ceiling that's imposed by the Monetary Authority of Singapore, the MAS. Is there any risk associated with this?
Yeah, I think I'll take this. Yeah, so this is something that is top priority in terms of the manager's mind, right? So clearly, being too close to 50 is not an area that we want to be in. We were caught in a slightly unfortunate situation where, while we have done our major lease recap, as what Charlene shared earlier, in March 2022, all our good works in terms of getting that income stability and hopefully a stronger valuation outcome was actually washed away by the macroeconomic outlook. So we landed in the final position at the end of the year at a gearing ratio of 45.8%. Our interest coverage ratio is 4.6 times, which is way above the minimum required of 2.5 times to be within this range of gearing. What it really means to investors is that, look, I mean, I'd just be as upfront as possible. The gearing limit is 50%. So in other words, in terms of financial flexibility and debt headroom, we are quite close to the maximum. That said, in terms of liquidity, in terms of cash flow, the underlying business fundamentals is very clear. It's a government lease real estate. We receive our rents in full in advance ahead of the due date. So in other words, they pay 3 months in advance all the rents. So income visibility is very strong. All our leases are running, majority of our leases runs to 2028. So in terms of income distribution wise, what we can say is that it's going to be stable. It's going to be, there'll be line of sight in terms of ability for us to distribute income. Where the slightly trickier issue is that in case when you need to grow, you need to acquire things, or you need to fund things via debt, you have to be more judicious, you need to be more prudent so that you don't aggravate the gearing ratio outcome. And just for the benefit of investors is that in the situation where your gearing limit is breached 50% and it's due to a macroeconomic environment that's outside your control as a manager, MAS doesn't really while it's a technical breach, MAS don't really fault you directly for it. So you're given time to cure it. So in other words, even if we were to hit above 50% and it's due to, let's say, for example, market volatility and economic conditions, the manager is actually given time to cure it and to try to make it and bring it down below 50 or below 45, whichever number that makes sense. So I think that's something that I wanted to highlight. As long as not the doing of the manager, like we indiscriminate that or we do silly things to aggravate the situation. If it's really driven by macroeconomic conditions and something really happens, it's not going to be a punitive like, oh, shut down the business. It's actually going to be like, hey, get your house in order, like bring the things down and before you do any other growth related matters. So I think that's something I wanted to just share, that the color that you must understand the color or the main driving force of what's causing this the elevated gearing ratio position.
Yeah, maybe I could add a little bit on this, is that, and I've mentioned earlier, on the asset front, some of the assets that we see that are coming back to us, potentially we are actually disposing them. So, and also the DLAPs that we're collecting. So any of these processes that are coming in, the first priority ranking of the usage is actually to pay down the debt. So hopefully with that, we will be able to gradually lower down the gearing ratio before, we see the change in terms of valuations, when we do the next valuations. Yeah.
No, I think, Joel, your point was well taken. I think it's more a case of the macroeconomic driving it, right? It's really out of the REIT's control in terms of the environment. I guess that relates to the next question, which we have from our team, is to do with interest rates. I mean, we saw inflation come in stronger than expected in the UK yesterday. Not great news. So I think as that relates to the Bank of England, the BOE, then I assume, or I guess the market assumes that rates are going to have to continue climbing. So, I mean, with Elite Commercial's interest rate exposure, you've got around 69% of it sort of fixed, right? Does management intend to increase that hedging, like near term, to manage that risk? I mean, how do you see that going?
Okay, I think okay, so I think maybe I take the macro and then I will talk about the actions taken. So you are right. One of the long-term targets by Bank of England is to bring the long-term inflation target down to 2%. And yesterday, when the CPI came out and it actually surprised on the upside, instead of climbing, steadying down, it actually flashed the higher number. That's something that probably is outside expectation of the normal investment community, and therefore the market implied path for Bank of England rates is to hike at least 1 or 2 more times before it stabilizes and then taper off. How long it stays at the peak is your guess against mine. We don't have that crystal ball gazing ability, given that, even like for them, they are unable to predict correctly the CPI trend as well. But that said, I think in our view, the banking equilibrium or the financial markets equilibrium is about there already. Raise it too much and something else in the system breaks. So I think the central banks are also quite cautious. Like what you see what the Fed has done yesterday, instead of like going through their market implied path of 50 basis points, what they wanted previously, they had to take into consideration the recent bank failures that's going on in the US and do a more measured kind of increase. So we see that this is going to be an ongoing theme between the central banks of the developed market, where they have two difficult goals to achieve. One is to make sure that I bring my inflation down. On the other hand, I don't use my monetary tool to the extent that it breaks the system. So I think that is the delicate balance in our view, and therefore, which brings to our own position here. So what we have done is that we have taken the step to hedge majority of interest rate exposure. So anything that the central bank does has a mitigated impact on us. Our all-in cost of borrowing of 4.6% was a snapshot approach as of 31st December 2022. It's not a full year average out approach. So it's pretty much what you see, what you get. From there onwards until now, I think I don't recall any more hikes in between, but yeah, that's so our interest rate is pretty much at a point until we see further rate hikes from the Bank of England. So I think that's the view that we're taking. And in terms of whether to increase the interest rate to increase the interest rate swap, it's actually a function of cost benefit analysis, because at a point in time, you must remember that every time you hedge in, you take on new hedges, you are basically socializing the forward yield curve to today. So it means that it's possible that you are taking a lot of negative carry. If let's say your forward yield curve is very steep, you are taking a lot of negative carry today, which means that you're taking on unnecessary interest costs. So actually, to us, as a financial management risk policy, typically we will fix or hedge majority of our interest rate exposure. So as of today, we do think that at 69%, we are actually quite okay in terms of the hedging position, and dovetailing with what Sheldon mentioned in terms of what we're going to do with the proceeds from the labs and divestment, which brings down the loans. We will definitely pay down the floating ones, right? So over time, that should be an equilibrium position that we are happy with. Yeah.
Okay, that's good to know. Thanks, Joel. I guess this is for either of you, Sheldon or for Joel. I mean, what's the management's outlook for the UK market and economy in general? I mean, we've seen a lot of negative news come out about the UK, and how does that relate to the real estate market in particular? Is that a bit different? Is that a bit brighter, the outlook there? I mean, what's your take from what you're seeing?
Okay, I think the market is still quite weak. The Europe just finished just had this big real estate conferences in MINPIN in Keynes. They have MINPIN just a week ago. I think a lot of investors, particularly investors with cash, are looking out. Potentially, if the market stabilizes, we should see more activities coming up in the second half of the year. But as of now, and particularly with the current financial uncertainty, market uncertainty, I think it's still on a lookout mode. We don't see huge amount being traded. There are people trying to sell, and we do see prices coming down, but there's actually no or not enough transacted volumes to prove the pricing and all that in the market. So it's still a wait and look and see market at this point in time.
I wanted to add on also to Sheldon's point. I think actually when coming to investments, I think it's also important to look at how the market has reacted to the stock price versus what the real economy is going towards. Because I think a lot of times when we look at UK and we look at what the global economies are going through, we think that, hey, I think things are going belly up, and therefore the share price has been quite weak. But actually, it's something that we wanted to also highlight to investors that our tenant is a uniquely countercyclical tenant. They are your welfare benefits provider. So when the economy is weak and it's under pressure, that's where they go to work, right? So they were actually, like during COVID itself, despite having around 800 centers around the country, they had to open a lot more temporary centers to cope with the demand for social benefits. So for this particular counter itself, I think hand on heart, being a government tenant that provides social benefit means that they go into work, they have a lot more activities to do when the economy is bad, and therefore it forms a very unique counter-cyclical product for investors in this period of time because of the income certainty, because of the expansionary mode they go into when the economy is not doing so well. So I think everything has to be seen in the wider context of things. So when you look at the market, yes, the market is not that strong. Then you have to look at the macro, which is the company fundamentals, which is something that I think probably is not well publicized enough for Elite Commercial REIT, that we have a very strong counter-cyclical tenant, and they are typically quite expansionary during times of weakness.
Yeah, that makes sense. I guess when people are out of work, or if they're, there's a recession, that demand for DWP kind of space will be there, will still be strong, right? So that does make sense. Okay, I think one final question to end on. ESG has made a lot of noise. There's a lot of talk about being environmentally friendly and being efficient with energy usage, and I think that comes into play with real estate as well. So do you think you could share a bit more on what you're talking about a green lease clause? I mean, what exactly is that, and what's the significance of this, and how do you see it, I guess, evolving over time?
Okay, maybe I can take this one and Joel can add on, because he has also been working on the green loans as well that pertain to this. Now, all our leases are not FRI, meaning that we don't have the ability to manage the building. We don't have the ability to, calculate what is the amount of electricity use, water usage, etc. So the green lease clauses are very important. What we have in the green lease clauses in the lease agreement means that the tenant is obliged to share with you the information that they have. So they will share with us in terms of, for example, DWP, every year we'll be collecting all the data on exact amount of a water usage, exact amount of electricity usage, and also things like the garbage as well. We are talking about switch start numbers this year. So these are all the things that the tenant has been using, how they are using in this building. So without this clause, basically, you are in total darkness as to how the property is being performing with regards to energy efficiency. With that clause, it actually helps us to, over time, monitor the performance of that property, knowing that what are the needed points to invest in the property. The last thing you want is you wait until 2028 when the lease are expired, and if the property comes back to us, then that's the point where we have got ability to put in more money into it. That will be very hefty, because it will be a huge pool of sum that we're talking about. So what we are actually working on this collaboration with the government is that we've committed £15.4 million over a period of 3 years, both to DWP and also to the Ministry of Defence, basically to sort of like part fund those investments that they're doing to increase the energy efficiency. So that over time, we should be able to see that if this improved, are they using less electricity? Are they using less water? So how is it actually really translate into the financial numbers of that particular property? So that's where the green leases are very important. So over time, I think majority of our leases, more than close to 90%, if I could recall, does have such clauses. Is the remaining that we are trying to insert in as well. So once there is a lease expiry, we'll try and insert those clauses into the lease agreement. It's something that, you know, we are quite fortunate that we do have it with the DWP one. So every year we have been able to collect, at least for the second year now, we are able to collect much more data than a lot of other REITs would be able to collect under such a FRI leases or triple net leases.
Yeah, I guess it's all about data as transparency, right? Yeah, Joel, sorry, did you wanna jump in?
Yeah. So I think also another point to add on ESG matters, right? Sustainability is definitely an important pillar to the strategy of the business. And I think other than the green lease clauses, which give you the information to understand the efficiency of the building, what is also really important is to bring the energy performance of the building up to speed, which dovetails with the sustainability collaboration agreements we have with the government to reinvest into the buildings, and also the funding for it as well. So from an ecosystem point of view, it's one thing to have a green strategy, is another to implement it on an operational level and to get the supplies for it, which is the money. So I think in this aspect, Elite Commercial REIT has taken a step forward in the right direction. You have the strategy, you have the implementation with the collaboration to bring the energy performance up, and you have the ecosystem to fund it. So I think that's the point that I thought was also quite important to note, over and above the green lease clauses, because there's an information covenant. Whereas what is important is that how the information covenant fits into this whole ecosystem to implement that as a sustainable strategy.
Yeah, I mean, I guess also, I mean, from a personal investor perspective, I guess it relates to the NAVs and the actual appeal of the property in time, right? I mean, if you're getting ahead of the curve and you're actually investing into it, you're going to be able to get more in terms of rentals further down the line, and it's going to be more energy efficient and more appealing to future tenants, right? So I think it's about investing now for the future benefits.
I think you're spot on.
The line. Yeah,
you're spot on, because it's not an immediate effect. It's actually the long-term effect that you want to create.
Right. Yeah, it's the appeal of that property further down, right? It's about growing that NAV. So I think that's it for today. Thank you, Sheldon, and thank you, Joel, for giving up your time. And we had a question about sharing the presentation slides, but I think actually that's actually just your website, FY 2022 results, which you can find on Elite Commercial REIT's Investor Relations website. So if you just go to Elite Commercial REIT Investor Relations, you'll be able to find those slides and download them there. So no need to share those slides here. So thank you for your time, Sheldon. Thank you, Joel. That was a really interesting look at Elite Commercial REIT and their UK portfolio. Next week, we will be hosting another REIT, so please do tune in. I think we'll be hosting Sasser REIT next week on ProsperUS. So please do tune in for that. And thank you again, Sheldon and Joel. And until next time, everybody, have a good day, and thank you for taking the time out today.
Right. Thanks, everyone.
Thank you.
Thank you.
Bye.
Right.